Let's focus on the IT sector for a bit. Cognizant has reduced its guidance. Pranay is now joining us. Pranay, what to expect for Indian IT?
Well, the stock of Cognizant was down 5% after its results on NASDAQ yesterday. Actually, the numbers were in line when it comes to growth of about 2.1% growth. When it comes to guidance, they have actually modestly upgraded it to 8.4, and the upper end of the band is 10%. The earlier guidance was 8 to 10%. The reason for the bump up in the lower end is because of factoring in the acquisition of Boulder, which is expected to contribute about $100 million or about 60 basis point tailwind. The bummer over here is there has been no upgrade in the organic growth, which perhaps is a turn off this time, which is why the stock was down. Also, a lot of investors were expecting this kind of upgrade, a small upgrade at least, given that growth in North America has picked up and outlook for Europe also has been good. But what Cognizant actually went on to say was that it is seeing some pressure in the large North American banks. So since it has a high exposure of about 76% to the North American region, with 37% of the revenues coming from BFSI, that would have implications for Indian companies such as TCS as well as Infosys, which have a higher concentration of revenue coming from the same space. And therefore, barring TCS, actually none of the tier 1 IT companies have posted strong results or given a strong outlook or commentary. So that has been the common observation. It's only TCS that has actually shined through, and hence the rally that we saw in the stock. Even going forward, TCS management has said that they will have to wait for Q1 numbers to see a turnaround in the US BFSI spend. So as a result of this, you could see some downweight on the Indian IT companies in today's session.
Every time that we discuss Cognizant, most of the Indian IT companies don't declare their numbers. But this time around, all the Indian IT companies have declared their numbers, given their outlook. So the reaction would be slightly different or muted compared to what you've seen in the previous past.
Well, yes, but it's always slightly different because, it's posted stable set of numbers, 10% growth in outsourcing, 11% in consulting. So it has its different mix, but where it is common is North America as well as US BFSI, so the largest region and the pot which makes the maximum money for them. Therefore, a similar kind of reaction since the run-up in all these Indian stocks has been so steep. Most of them, even those which don't have a relation particularly in terms of the mix, but just sentimentally they've gone up. So sentimentally there should be a downweight on most of these large caps as well as mid caps going forward from here, because most of the analysts have said that after this sharp rally, the valuations have touched levels where they see very little scope for further re-rating or upside, and focus is all going to be on execution. So when we are seeing that there is no real change in the guidance and they will have to be watchful from Q1, as it is, that the wage hikes will kick in, so there will be some pressure on the margins, and outlook on further commentary will be awaited. Therefore, you will see some uncertain moves on these stocks.
Okay, technology would be in focus today.